Yeah, good evening to each and everyone present here. In previous session, we had discussed. In previous session, we had discussed about single candlestick patterns. That each individual candlestick conveys a unique story about market sentiment and price action. This story evolves depending on the time frame being analyzed. By interpreting these stories, traders can gain insights into potential market trends and reversals. And we had discussed two primary components of a candlestick, that is the body and the wick. The body represents the difference between the opening and closing prices of a candlestick, and the wick represents the highest and lowest price reached in the candle, and these together create a comprehensive picture of price action. And we had and we have divided the candlestick patterns into three types. First one is based on momentum, and second one is based on wick size, and third one is based on dojis. In based on momentum candles, we had talked about Marubozu candlesticks. Marubozu candlestick is a candlestick with a full body and no wick, which often indicates a stock buying or selling momentum. For bullish Marubozu, we had talked about four conditions, that if bullish Marubozu forms when the market is up, it indicates confirmation. And if bullish Marubozu forms when the market is up and there is a resistance, it indicates a breakout. And if bullish Marubozu forms when the market is down, it indicates we have to neglect it. And when bullish Marubozu forms when the market is down and there is a support, it indicates a reversal. And similarly, for bearish Marubozu candlestick, also we had discussed four conditions, that when the market is up and if bearish Marubozu forms, we have to leave it. And when the market is up and there is a resistance, and then if bearish Marubozu forms, it indicates reversal. And if bearish Marubozu forms when the market is down, it indicates confirmation. And if bearish Marubozu forms when the market is down and there is a support, it indicates a breakout. And uh, yeah. And in based on wick size candles, we had discussed about hammer, hanging man, inverted hammer, and shooting star. In simple terms, we had discussed that if the wick is big on the downside and small at the top, irrespective of candle color, either green or red, we take it as bullish. And if the wick is big on the upside and small at the bottom, irrespective of candle color, either green or red, we take it as bearish. And in based on doji candles, we had discussed about neutral doji candle, long-legged doji candle, gravestone doji candle, dragonfly doji candle. In essence, we had discussed that these doji candles forms when the price is pushed both upward and downward during the trading period, but ultimately closes near its opening price, which indicates that neither buyers nor sellers were able to gain control, leading to a stalemate. And to be frankly, there is no use by remembering the names of candlesticks. I mean, today we are going to discuss about double patterns and triple patterns, and there are many names for those candlesticks too. And there is no use in remembering the names of these candlesticks. In the market, in the live market, we need to take decisions within the span of seconds. So we need to understand the psychology of the candlestick. More than names, I request you to please try to concentrate on psychology. Like what does the psychology indicates? Like see, for example, in wick candles, if the wick is higher on the downside and smaller on the top side, it is a bullish. And if the wick is higher on the top side and smaller on the bottom side, it is a bearish. So that's how the psychology works. And there can be n number of names. But if we remember the psychology, it will be easy for us to understand. And now we will learn the patterns formed by the combination of two candlesticks and also the patterns formed by the combination of three candlesticks. So before we start, we need to understand we need to understand two concepts. So in candlestick analysis, I mean, this is the basic, this is the very important. Uh, See, the difference between inverted hammer and shooting star is the inverted hammer forms. If the candlestick forms, I mean, first of all, in only Moroboso candle, we consider we consider bullish as green color and we consider red as bearish. But in big size and doji candles, we don't consider the color. It can be of any color. It can be of green color or it can be of red color. So in big size candles, when the price falls and then if the wick candle forms, then we call as a hammer. And when the candlestick forms, when the price moves upside, we call it as a hanging man. So these two are bullish. So in bullish, I mean, what is the indication of bullish means? If the wick size is high on the bottom and less on the top, it is bullish pin bar. So in bullish pin bar, when the price falls, I mean, if the wick candle forms when the price is falling, then it is a hammer. And if the wick candle forms when the price is moving upside, then it is a hanging man. Similarly, if the big size is high on top and less on bottom, then it is a bearish. It indicates bearishness. So if the candlestick forms when the price moves upside, then it is shooting star. And if the candlestick forms when the price is falling, then it is the inverted hammer. So these two indicates bullishness, these two indicates bearishness. It's just a difference that when the price is falling, and then yeah, when the price is falling, and then if the candle forms, we call it as a hammer. And when the price is moving upside, then if the candle forms, we call it as a hanging man. Similarly, if the candlestick forms, when the price moves upside, then it is shooting star. And when the price falls, then it is an inverted hammer. So before we start today's concept, there are two things to understand. So these are the standard things. If you remember this one concept, you have understood almost the half of the candlestick patterns. So in candlestick analysis, we often observe strong bullish or bearish candlesticks. We often observe strong bullish or bearish candlesticks. And the common practice is to react based on price action around them. Typically, if the price breaks above a bullish candle, it's seen as a buying opportunity. While it moves below, the trade is avoided. Similarly, with bearish candles, a breakdown signals a potential sell. However, trading purely based on the appearance of single candlestick is not advisable. To make informed decisions, it's crucial to focus on proper levels and confluence. Like by simply looking at candlestick, it's okay. We can tell by looking at here. Okay, here the reversal happened. Here the breakout happened, like that. But when you see in the live market, it will be very difficult. But so instead of depending on single-handed on candlesticks, we need to look at proper levels and something like moving averages, Fibonacci levels, trend line, like that. So, in other words, bullish or bearish candlesticks should be combined with other technical signals to improve the accuracy of our investment. So, here, when does the bullish candlestick forms? The bullish candlestick forms when the price is falling. The bearish candlestick forms when the price is increasing. So see, when the price is falling, forming a red candle is not a big deal. Forming a red candle is a common thing. When the price is falling, if red candle forms, it is a common thing. But when the price is falling, and then if the green candle forms, then it indicates I mean, it is not a normal. It is not normal. I mean, it indicates something reversal. I mean, it indicates the trend. I mean, it indicates the opposition of the trend. So similarly, when the price is increasing, forming a green candle is not a big deal. It is very common. When the price is increasing, forming a forming a green candle is very common. But if red candle forms at that point, it indicates the trend is changing. So that this is the concept that we need to understand, that if a candlestick forms when the price is falling, then it indicates bullishness. And if a candlestick forms, if a candlestick forms when the price is increasing, that it indicates bearishness. So a bullish candlestick or bullish reversal pattern is most significant when it forms after a downtrend. The price needs to move down for these candles to have value, as they signal a potential reversal from sellers to buyers. Additionally, if this bullish candlesticks appears near a support level as identified by previous price action, it provides further confirmation that a reversal might be underway. At this point, sellers are likely weakening, and the presence of a support zone reinforces the possibility that buyers could step in. However, we still don't take the trade just because we see a bullish candlestick. The next step is to wait for confirmation. So there will be three things. Uh, first, first the first we will see the trend reversal, then we will see the presence of it, and then we will see the confirmation of it. So just by looking at one candle, we can't able to take any decisions. So we need to wait for confirmation. So similarly, on bearish candlestick or bearish reversal patterns are most meaningful when they form after an uptrend. This suggests that the buyers are losing momentum. We don't want to sell while the buyers are still strong and the market is trending upwards. Instead, we wait for the price to reach a resistance level where the buying momentum starts to fade. And here, the main important thing is location matters. We have to observe the candlestick based on the trend, but never expect that the candlestick will change the trend. I mean, see, for example, here when the price is falling, the forming a red candle is not a common, is very common. But here, forming a green candle in middle of this, it indicates that the trend is changing. But still, you can, even though there are some green candles, but still the price falls. So we first we need to understand that the trend is our friend and we need to follow the trend. Never expect that the candlestick will change the trend. So when the candlestick forms according to the trend, okay, then it indicates, then it will be more useful. So the concept that we need to understand is when the price is falling, and then if a candlestick forms, that it indicates a bullishness. And when the price is increasing, then if the candlestick forms, then that it indicates a bearishness. Yeah. So we start. So in double candlesticks, the first concept is bullish engulfing pattern and bearish engulfing pattern. So what is this bullish engulfing? The bullish engulfing pattern. So here again, here what does it indicate? Bullish. Just now we had discussed. When does this bullish forms? When the price is falling, then only the bullish forms. So you had understood now. When the price is increasing, then green candle, forming a green candle is very common. So at that time, okay, at that time the bullishness, we can't call it as bullishness. So this bullish engulfing pattern will be used when the price is falling. And similarly, bearishness. Previously, we had discussed that when the price is increasing, and then if the candle forms, then it indicates a bearishness. So this bullish engulfing pattern forms when the price is falling, and this bearish engulfing pattern forms when the price is rising. So this bullish engulfing pattern are only important when they form after a price decline. If the pattern also appears at a support level, that adds further combination of further confirmation. So when the market is falling, it's natural to see red candles as they represent the dominance of sellers. In a bullish engulfing pattern, the first candle is typically red, which is expected as the price is declining. There is no surprise here. Now, when we see the next candle, after the red candle, the price opens below the previous candle close. Let's see, here it is the open and it is the close. And then the next candle, after the red candle, the next candle price opens below the previous candle close, showing that sellers still have strength at the beginning of this time frame. Okay, let's assume that this is the 15-minute time frame candlestick. So in 15-minute time frame candlesticks, there are completely sellers. In the next candle, it had opened below the previous close, which indicates that there is still strength of the sellers. The sellers push the price lower, continuing the downward momentum. However, at some point during this time frame, buyers start to gain strength. They begin to push the price upward, overpowering the sellers, and the candle ends up closing significantly higher than it opened, engulfing the entire previous red candle. What does engulfing means? Just like how if eagle want to eat anything, it just grasp it. It completely absorbs it. So from that, this engulfing word came. So see, if you consider it as 15-minute time frame, when this candle forms, before 15 minutes, it is still bearishness. It is still in red color, but the buyers gained momentum, and it had raised so much that when we look from this side, this green candle covers the entire red candle. So it indicates a bullishness. So this bullish engulfing candle is a clear signal that buyers have taken control from the sellers. The strength that sellers showed during the price decline is now being countered by the bulls. If this pattern forms near a support level, it becomes an even stronger signal that the market might be reversing. And whereas on the other side, the bearish engulfing pattern, it is the counterpart to the bullish engulfing pattern. I mean, it's just the opposite to what we had discussed in bullish engulfing pattern. So bearish engulfing pattern or bearish reversal patterns are only significant when they form after an uptrend. If the pattern forms near a resistance level, it adds double confirmation that the market may be reversing. So here see, when the market is trading upward, it's typical to see green candles. It's very common to see green candles as buyers push prices higher. The first candle is green, indicating that the buying activity is still ongoing. This is expected in an uptrend, so there is no surprise here. But when we look at the second candle, it opens higher. It opens higher than the previous green candle's close, suggesting that the buyers initially still have control and the upward momentum continues. However, I mean, here also, if we assume this as 15-minute time frame, the sellers start to take over. They push the price downward, and by the time the candle closes, it has not only reversed the upward momentum, but also engulfed, but also completely covered the entire previous green candle, closing below the first candle's open. This strong red candle signals that sellers have gained control, overpowering the previous buying pressure. The shift from buyers to sellers is what defines the bearish engulfing pattern. I mean, if you look at, it practically, see, at 27 October, we can consider it as bullish engulfing pattern. So similarly, you may get doubt like, okay, in previous image it is different. Okay, so in live market, I mean the images and in practically it will be not exactly the same. I mean there will be slight difference as it is live market. So I mean there are little big. So there may be slight difference, but here again we need to understand the psychology. Like here when the price falls, the forming a red candle is not a big deal. But here after that, a complete reversal happened. A bullish engulfing pattern forms, and you can see it had closed below the previous candle. I mean, it had closed above the previous candle. So it indicates a bullish engulfing pattern. So yeah, similarly here on 25th July, we can see that when the price is rising, that forming a green candle is very common. But after that, you can see that I mean a red candle had been formed, and it had completely engulfed the previous candle. So it indicates a trend reversal, and it had formed near the resistance level. This is the important thing. So okay, you can. Well, I mean, if you observe, you can see many type of engulfing patterns, but we give importance to only those which forms near the resistance level or which forms near the support level. And if we check, you can find I mean, we can find many patterns. I mean, many engulfing patterns. So just like you can see, the I mean, this can be an this can be an bearish engulfing pattern. Yeah, and this can be a bullish engulfing pattern. So in the same way, if we observe, we can understand. I mean, we can find many candlesticks. Yeah, but at the end of the day, we need to understand the concept that I mean, it's completely engulfing. Like it indicates a trend reversal. Like if we even understand the concept which we had discussed on the below. I mean, when the price is falling, forming a red candle is not a big deal, and when the price is increasing, forming a green candle is not a big deal. But forming a green candle is, I mean, when in bullish engulfing, forming a green candle when the price falls, then it indicates a reversal. And the same the case with bearish engulfing pattern. So, so here, see, in candlesticks, so if we want more clarity, we need to look at higher time frames, like 1 week time frame, or 1 week time frame, but 1 month time frame, or 1 day time frame. See, if we look at, for example, if we look at 1 minute time frame, we can find n number of candlesticks, n number of candlesticks, but that does not indicate that much importance. And similarly, if we look at 15 minutes, we can similarly find n number of candlesticks. So, but when we look the candlesticks at higher time frames, that it indicates a more clarity. Like, for example, in bullish engulfing pattern, let indicates, let's think it is a 5 minute time frame. Here, as example, in 5 minute time frame, if I am seeing a bullish candlestick in 10 minute time frame, it indicates a hammer. Again, we had discussed that hammer indicates bullishness as the wick is high on the bottom and higher small on the top. Again, it indicates a bullishness. Yeah. Yeah, similarly, here you can check. I mean, if you check it is the support level, like, yeah, it is the support level, and you can see here near support level, it is complete a bullish engulfing pattern. So see, it is a small candle. Okay, it is a small candle, and the next candle completely engulfed the previous candle. I mean, it had completely engulfed the previous candle. I mean, it had completely taken over the previous candle. So it is a bullish engulfing pattern which had formed near the support level. So similarly, yeah, and we can consider this as, I mean, like, here, yeah, and we can consider this as a bearish engulfing pattern. Okay, even though this candle is formed, the next candle had completely engulfed the previous candle. So that's the psychology. So we can consider this as a bearish engulfing pattern. So here, I mean, more than examples, we need to understand the psychology. So that's what. Uh, so here, if bullish engulfing pattern forms, if we see in the higher time frame, we can see this as a hammer. We can see this as a hammer. And again, if we see the bearish engulfing pattern, I mean, if we are seeing the bearish engulfing pattern, for example, in 5 minutes time frame, then in 10 minutes time frame, we can look the shooting star. So here, what this it indicates means, I mean, if we want the more clarity and more understanding, we need to look the candlesticks at higher level. See, because if we look at lower time frames, we can get n number of candles. I mean, we can get more candles, and more candles will be, I mean, it confusing, like, right? So yeah, so that's and there is another candlestick by the name three outside up, and it I mean it is the candlestick uh, which forms by the combination of three candlesticks, and its this name is three outside up. Three outside up is nothing but a bullish engulfing confirmation of bullish engulfing pattern. I mean, as I had told, I mean we need to wait for confirmation. Like, okay, the first candle indicates a reversal. I mean, the first candle indicates that the trend may change. The second candle indicates presence, and the third candle indicates confirmation. So, the bullish engulfing pattern we had understood, and if the confirmation happens to this candle, I mean, confirmation means what? Confirmation means, I mean, the next candle have to uh, close above this previous close. I mean, this previous close, the next candle have to close above this previous close, then it is confirmation. If the confirmation happens to bullish engulfing, we call it as three outside up. And if the confirmation happens to bearish engulfing, if the confirmation, I mean the confirmation candle forms to the bearish engulfing, we call it as three outside down. I mean, it's just that we are getting the confirmation. Okay, I mean, in bearish engulfing, there may be a chance that it may be fake. I mean, it may be a fake candle. But in three outside up and three outside down, we are getting the confirmation. Let's say, for example, here, as we had told, it is a. It has, I mean, yeah, like see, for example, here it is a bullish engulfing pattern, and the next pattern given us the confirmation. Okay, uh, I mean it forms a doji candle, but still here the concept is like it have to close above the previous close. So it it I mean it indicates the confirmation. So we can call it as three outside up. So in the similar way. So the concept is like in the bullish, if the confirmation happens to bullish engulfing, we call it as three outside up. And if the confirmation happens to bearish engulfing, we call it as three outside down. And now we have bullish harami candle and bearish harami candle. So, so this is also same as bullish engulfing pattern, bearish engulfing pattern we had discussed. Same bullish harami, bearish harami is also the same. The only difference is it is inside candle, that is outside candle. I mean, previously we had discussed the next candle which will forms, it will completely engulf the previous candle. That's why we call it as engulfing patterns. But here in harami, the it does not engulf. I mean, it will be within the range of previous candle. I mean, it won't cross the range of the previous candle. It will be within the range of the previous candle. That is the only difference between the engulfing and harami. So, the harami candlestick pattern, it can be also known as inside bar. So, it is a common reversal sign that can be either bullish or bearish. So a bullish harami forms when the market is in downtrend. Again, here also we need to understand. Previously, at starting we had discussed, then when the market is falling, and then when the market is falling, If the market is falling, then if the candle forms, then it indicates bullishness. When the market is increasing, then if the candle forms, then it indicates a bearishness. So a bullish harami forms when the market is in a downtrend. And after a bearish candle, a small bullish candle appears. This green candle opens above the red candle's close, opens above the red candle's close, and closes higher than its open, indicating that the bulls are entering the market. The key aspect of a bullish harami is that the body of the green candle is inside the body of the preceding red candle, signaling a potential reversal. This pattern shows that after a period of selling pressure, buyers are starting to gain control, suggesting that the market could reverse upward. And the same, if the bullish harami gains, I mean, if the bullish harami forms near the support level, we give it more significance. Similarly, a bearish harami. A bearish harami occurs after an uptrend when a large green candle is followed by a smaller red candle. The red candle opens below the previous green candle's close. Green candle close and closes lower than its open. Despite the upward momentum, the second candle stays within the body of the prior green candle, indicating that selling pressure is building. This pattern shows that the bulls who were previously in control are now being challenged by the bears. Even though the price attempted to move higher, the bears stepped in, causing the price to close lower by the end of time frame. And if this pattern forms near a resistance level, it strengthens the likelihood of a downward reversal. So simple. The only difference between engulfing and harami is, and in engulfing, the candlestick completely engulfs the previous candle. I mean, it completely take over the previous candle. Whereas in harami, it will be within the inside of the previous candle. And again, if we, for example, if we are seeing the bullish harami candle in 5 minutes time frame, in 10 minutes time frame, we can see a shooting star. Yeah, and again, in 5 minutes time frame, we are seeing a bearish harami candle. In 10-minute time frame, okay, we indicate it is a shooting star and it is a hammer. Sorry, it is a hammer and it is a shooting star. Again, here the concept is right. If we look at lower time frames, if we look at lower time frames, the more candle will forms and it will be more confusing. But when we look at higher time frames, the less candle will forms and we will get the more clarity. So again, here in bullish harami, again, in bullish harami, sometimes what happens means instead of this Morobozo candle, sometimes a doji candle will forms. So when the doji candle will forms, we call it as harami cross. And if further confirmation happens to this bullish harami, we call it as three inside up. So again, confirmation means what? If it closes above the previous close, then it is a confirmation. So again, it is a three different concept. But if we understand the psychology, it is very easy to understand. I mean, if we start understanding by the names, it will be very confusing. But if we understand the psychology, so it will be easy to understand. So again, by making small changes to bullish and bearish harami patterns, we can learn two more candlestick patterns. So, I mean, if the second formed candle is a green candle like a doji, then we call it as a harami cross. And if the confirmation happens, then we call it as three inside up. And the same in bearish harami candle, if instead of the Morobuzu candle, if doji candle forms, we call it as a harami cross. And again, okay, sorry, it is again bullish. Yeah, yeah. In bearish harami candle, instead of the Morobuzu candle, if doji candle forms, again in doji candle, colors will play no role. It can be of any color. If doji candle forms, we call it as a harami cross. And if the further confirmation happens to this bearish harami candle, further confirmation means previous close should be above the, I mean, the close should be above the previous close. So that is the further confirmation. And if further confirmation happens, we call it as three inside down. And then we have the pursing line and dark cloud cover. Again, see, if we start learning by the names, it will be so confusing. But if we understand the psychology, it will be very simple. See, in first we had discussed about engulfing pattern. Engulfing pattern, what happens? It had completely taken over the previous candle. And second, we had learned about harami candles. In harami candle, what happened? It does not take over, but it will be inside the previous candle. And again, if a confirmation happens, I mean, we have learned the different candlesticks like three inside up, three inside down, and three outside up. I mean, yeah, I think that's the name. Yeah, three outside up. Yeah, three outside up and three outside down, three inside up, three inside down. So we had understood that. But again, in pursuing line and dark cloud car, what is happening? So instead of engulfing or instead of inside, it is forming higher highs and high on highs and low on lows. So that's the only difference, and the concept will be the same. Again, the pursuing line pattern, and again we need to see, like, see, when the price is falling, forming a red candle is not a big deal. But at the time, if the green candle is forming, then it indicates a bullishness. And again, when the market is increasing, forming a green candle is not a big deal. But at the time, if the red candle is forming, then I mean, then it indicates a bearishness. So again, this piercing line will form only when the market is on downtrend, and this dark cloud cover forms when the market is on uptrend. And in a downtrend, it's common to see red candles as sellers continue to dominate. The first candle in the parsing line pattern is a long red candle showing that selling pressure is still strong. The next trading candle typically gaps down, meaning that the price opens lower than the previous day's close. Initially, it seems like the downtrend will continue as the price moves lower after the gap. However, instead of continuing downtrend, the price reverses from the intraday low and starts moving up, eventually closing above the midpoint of the previous red candle. This move is significant because it shows that the buyers are now entering the market and are strong enough to push the price above 50% of the previous day's red candle despite the initial gap down. I mean, in parsing line, there is a rule that the next candle which forms, it have to close above the 50% of the previous candle. So that's the only difference between engulfing harami. The only difference is in harami, it will be completely inside, it engulfing, it will be completely take over. In parsing line, it need to cover the 50%. And again, in the dark cloud cover, in an uptrend, it's typical to see a bullish candle. Green candle is very common, and it indicates the continuation of buying pressure. However, the significance of the significance of this candlestick, what happened is, for example, let's take these candlesticks as a one day time frame, because I mean we can also consider it as 1 hour, but in one day time frame it will be more meaningful. Uh, let's, for example, in an uptrend, I mean when the market is on uptrend, it's very common to see a bullish candle. But on the next day, a gap up opens. The market opens with a gap up above the close of the previous green candle, suggesting that the uptrend might continue. This initial gap up may lead traders to believe that the trend will persist. Despite the gap up, the price quickly moves downtrend. This move signifies that sellers are stepping in and countering the initial bullish sentiment. By the end of the day, if the price closes 50% below the midpoint of the previous green candle's body, it forms a dark cloud cover pattern. This pattern indicates that although buyers initially seemed to control the market, the subsequent selling pressure has been strong enough to push the price below the previous day candles. So again, just by looking at this, we cannot enter into trade, and we will wait for confirmation. And what is the confirmation? Let's say, for example, after the piercing line, if the next candle forms and it had closed below the previous day close, I mean below the previous day close, I mean, not below, above. If the next candle closes above the previous day close, then it indicates a confirmation, and then we can look for a trade, and we will place the stop loss at this point. Like the previous candle close will be the stop loss, and again, and then we can place it. Then we can place a trend. So similarly, so this is a passive line and dark cloud cover. And again, if we remember by the name, it will be confusing and it will be difficult. So just the concept in engulfing, it had completely take over. In it inside, in harami, it will be within the inside of previous candle. And in piercing line and dark cloud cover, it have to cover the 50%, minimum 50%. First it have to gap down. In case of Persimmon, it have to gap down, and in case of dark cloud cover, it have to gap up, and after that, it need to cover the 50% of the previous candle. Then the piercing line will form, and the dark cloud cover will form, and then again, if we see the piercing line, let's say if it is 5 minutes time frame, in 10 minutes time frame we will see a hammer. Again, it indicates a bullishness, and the same with dark cloud cover. If we see the dark cloud cover in 5 minutes time frame, for example, in 10 minutes time frame, we'll see a shooting star. So again, I mean, here the concept will be the same again. I mean, in lower candles, it will be more confusing. But if you check at the high time frame candles, I mean, we can get more clarity and it will be more easy to see. And then we have tweezer bottom and tweezer top. And this tweezer bottom and tweezer top is also the same. And see, this is the Harami candle. As you can see, the candle will be, I mean, this green candle is within the previous, I mean, within the inside of previous candle. And this is the Harami candle. And the next candle, okay, and this is the Harami candle. And for the, yeah, this is the first in, yeah, dark cloud cover. I mean, as you can see, I mean, on 7th July 2021, and this can be the dark cloud cover. Again, it doesn't form near the resistance level. That's why we don't really give that much importance. Again, yeah, even though here the candlesticks are formed, you can see this can be called as pursing line. Okay, okay, here there are small candlesticks, but still, as we have told, we need to understand this psychology. So in similar way, if we search, we can find many candlesticks. But here at the end of the day, again, we need to understand the psychology and we need to practice. I mean, when we look at more candles, we will get more clarity. But again, instead of remembering by the names, we need to understand the psychology. Like, what is the psychology? In engulfing, it is completely taking over. It in harami, it will be inside the previous candle, and in piercing line it have to be gap down, and in dark cloud cover it have to be gap up, and then it need to cover the 50% of the previous candle. That's the psychology. So the piercing line indicates bullishness and the dark cloud cover indicates bearishness, and the bullishness will form, and it is the most important, and it is the most important that the bullishness will forms only when the market, when the price is falling, and the bearishness will forms only when the price is increasing. And then we have uh, tweezer bottom and tweezer top, and tweezer bottom and tweezer top. Okay, again, the concept is same between the engulfing, harami, uh, and the previous things, dark cloud cover, piercing line. Just there will be different little difference. So a tweezer bottom occurs when the price is in a downtrend. Again, here, again, for everything, again, the same concept is coming. Like when the, I mean, when the price is falling and then if candle forms, it indicates bullishness. And when the price is increasing and then the candle forms, it indicates bearishness. A tweezer bottom occurs when the price is in a downtrend and a strong bearish candle, often a Morobozu candle, forms. This candle signals that the bears are in control of the market. Typically, if the low of this bearish candle is broken by the following candle, it suggests that the downtrend will likely continue. However, in the tweezer bottom, the next candle's low does not break the previous candle's low. Instead, a reversal takes place and the price begins to move upward. The key indication of a potential bullish reversal is that despite the previous strong bearish momentum, the next candle fails to push the price lower. If this second candle shows strength to the upside, it suggests that bulls are regaining control. This pattern makes a shift from bearish to bullish sentiment, signaling a potential upward reversal in the price. And similarly, conversely, a Twitter top occurs when the price is in uptrend and a strong bullish candle forms, indicating that the bulls are in control. If the next candle breaks the high of this bull candle, it typically signals a continuation of the uptrend. However, in the tweezer top pattern, the second candle fails to break the high of the previous bullish candle, and instead the price starts to move lower. This shift indicates that despite the strong upward momentum, the bulls have lost strength and the bears have entered the market. If the second candle is a strong bearish candle, especially if there are any levels like support level, or again it confirms, it increases the significance. This pattern suggests a potential bearish reversal, signaling a shift from bullish to bearish sentiment. And again, if you look at the Twizzler bottom at the 5 minutes time frame, in 10 minutes time frame, a dragonfly doji will form. Dragonfly doji means, again, it indicates a bullishness because the wick is high on the bottom and low on the top. And doji candles are like question mark candles. That doesn't indicate a it will be a question mark. We don't know what the next will happen. It will the bottom. And in Twizzler top, if we check, for example, if the Twizzler top appears on the 5 minute time frame, then in the 10-minute time frame, we will see the gravestone doji. Again, if we look at the practically, see, this is a this is a tweezer bottom. Okay, here the big firms again. We had told the live market there will be a slight difference, but as we can see, the lower had not break it. Here the red candle formed, and the next candle without breaking the low of the previous candle, again the green candle had been formed, which indicate a little. Here the of course here it doesn't continue the momentum, but still it indicates a tweezer bottom, like on 17 March 2023. This can be also a tweezer bottom, like without breaking the, without breaking the previous low. The only indication of tweezer bottom and tweezer top is it doesn't have to break the previous low. If the candle is, if the complete reversal candle is forming without breaking the previous low, then it is a tweezer bottom. And similarly, we can find, it can be a tweezer top. See here, on 27th March, it is the tweezer top. And again, when the tweezer top forms, it indicated a bearishness, and and then a bearishness had formed. And that a bearishness had been continued. So that's the concept. And then we have bullish meeting line and bearish meeting line. So again, this bullish meeting line Bullish means it will form when the market is in downtrend and the price is falling, and bearish means it will form when the price is increasing. In a downtrend, it's very common to see a red candle indicating continued selling pressure. However, in the bullish meeting line, the next candle opens with a gap down, suggesting further bearish sentiment. At this point, we might expect the price to continue dropping. However, if the price reverses after the gap down and the second candle closes near or at the previous red candle close, it signals a potential bullish reversal. This pattern indicates that despite the bearish pressure, the bulls have managed to regain control, pushing the price back up. If this pattern forms near a significant support level, its reliability increases. And again, in bearish meeting line, in an uptrend, forming a green candle is not a big deal. But after the green candle closes, the next candle opens with a gap up, which suggests continued upward momentum. However, if the bears take control and push the price down, and the second candle closes near or at the previous green candle's close, it indicates a potential bearish reversal. This pattern suggests that the bulls have lost momentum and the bears have stepped in to drive the price lower. If this pattern forms near a key resistance level, it carries additional significance as a reversal signal. And then, and again, uh, for example, if you are checking the bullish meeting line in 5 minute time frame, and in 10 minute time frame, the same the hammer will form. I mean, it's the same hammer. Here the psychology, the wick is high on the bottom and low on the top. And again, if you check the bearish meeting line on 5 minute time frame, in 10 minute time frame, we will see a shooting star. And again, here the concept of same. We need to understand the psychology. I mean, at the end of the day, if you check the the concept is okay. Of course, for the little difference, the concept is almost similar. Like in engulfing, it had completely taken over. In inside, it will be within the inside, and then yeah, in inside it will be within the inside, and then we have pulsing line. In pulsing line, it have to gap down, and then it need to cover the 50% of the previous candle. And in dot plot cover, it have to gap up and it need to cover at least 50% of the previous candle, and then it tweezer bottom and tweezer top without breaking the lows of previous candles. It need to form the complete reversal candle, and then in bullish meeting line and bearish meeting line, again it is also the same as pulsing top and dark cloud cover. The only difference is okay in that in that I mean in that a 50% of the candle have to be have to form, whereas in bullish meeting line it is not. So here, if we check, the engulfing pattern indicates a more power. I mean, the engulfing pattern have more power because in engulfing pattern, a strong Morobuzu candles have been forming. In engulfing pattern, a strong Morobuzu candle forming, and it is completely take overing the previous candle. So the I mean this engulfing pattern indicates a more power. It has more power, whereas these harami candles have less power. I mean, the harami candles have less power than the engulfing because it is not to take overing, it is just within inside. So it has somewhat less power than the engulfing. And then and then this piercing line and dark cloud cover, it has a somewhat less power than harami candle. I mean, because okay, even though it is completely inside, But here it had gap down and it had gap up, and then the reversal happened. So here there is somewhat less power than Harami candle. And then, okay, in Twizzler top, so this Twizzler top also indicates like, okay, I mean, this Twizzler top is also, I mean, after engulfing, uh, this Twizzler top also indicates a more reversal. I mean, more chance of reversal. It has more power. I mean, this Twizzler bottom and Twizzler top, it has more power than Harami, piercing line, dark cloud cover, but somewhat less power than engulfing pattern. And at last, and this bullish meeting line, a bearish meeting line, okay, this have somewhat less power. Like if we want to give ranks, I mean the first rank will be given to engulfing, and the second rank will be given to teaser bottoms, teaser tops, and the third rank will be given to harami, and the fourth rank will be given to passing the dark couple, and the fifth rank will be given to bullish meeting line and bearish meeting line. So that's the only difference. If you understand the psychology, psychology is same. The difference is just like the power. And then uh, and three candlesticks, and this is the most I mean this is the most important. And these candlesticks will form very less. See, triple candlesticks will form very less in candlesticks. I mean, it don't form more often. Like if we check the previous like engulfing, harami, is the top bottom, we can find many. I mean, we can find many patterns like that in stock. But this type of morning star, evening star, or the stock which forms with the combination of three candlesticks, it will form very less. I mean, it will be very rare. So this morning star, the morning star is a bullish reversal candlestick pattern, typically forming after a downtrend. It signals a potential shift in momentum from bearish to bullish. For this pattern to be more reliable, it often forms near a support level, providing double confirmation of the reversal. Here, there are three candles. The first candle is a strong red candle representing continued selling pressure. As the price falls, it's expected to see a red candle form, which signals that bears are still in control. After the first red candle, the second candle shows indecision in the market. This candle can either be a spinning top or a doji, which are neutral candlesticks. This candle represents a pause in the price movement, indicating that the downtrend momentum has weakened and the market is uncertain about the next move. At this point, the price seems puzzled as neither the bears nor the bulls are fully in control. The third candle is a strong bullish candle, confirming the bullish reversal. It shows that the bulls have taken over control, pushing the price higher. To better understand this process, you can think of price action like driving a car. When you are moving quickly in one direction and come to a turn, you naturally slow down your car before making the turn. In the same way, when the price has been moving strongly in one direction, here it is moving in downward direction, it often slows down before reversing. It reflects, I mean, the thought candle then confirms that the bulls are coming. I mean, it indicates the confirmation of a bull. And again, if this pattern forms near a key support level, it becomes even more significant as the strong selling pressure from the bears has been resisted, and the bulls are now expected to move the price higher. And in evening star, the evening star, it typically forms after an uptrend. It indicates that the bullish momentum is weakening and the bears are starting to take control. This pattern becomes significant if it forms near a key resistance level, as this adds further confirmation of a potential reversal. In the first candle is the strong green candle, which signifies that the bulls are still in control, pushing the price higher. However, this candle, however, in the second candle, it shows the indecision of the market. It can be a spinning top or doji. This candle represents uncertainty. As the price fails to move significantly higher or lower and its close is nearing the opening price. This signals that the bulls are losing strength and momentum, indicating a shift in control. And the third candle, it is a complete bearish candle that closes well below the second candle and often below the low of first green candle. This confirms that the bears have taken control of the market. The sharp reversal from the indecision of the second candle to the strong bearish momentum in the third candle signals that the trend has reversed and the price is likely to move downward. And if this forms near a resistance level, it further strengthens the case for a reversal. And again, uh, we need to wait for confirmation, and the confirmation is like if the next candle forms above the previous close, it indicates a confirmation. And again, in evening storm, if the next candle forms below the previous above the previous close, it indicates a confirmation. And now again, if you are checking the morning star in lower time frames, in higher time frame, again a hammer will form. Uh, Again, if you are checking the evening star in lower time frame, in higher time frame, a shooting star will form. And there are uh, some difference. Like, see, if the I mean here if spinning top, we call this candle as spinning top. So if this spinning top had form, then we call it as morning star. Instead of spinning top, if doji candle forms in middle, we call it as morning doji star. And we call it as abundant baby. Abundant baby means what? Means here the middle candle doesn't have any connection with the remaining two candles. So we call it as abundant baby. We can see like we can completely call it as gap down. It completely gap down. Like for example, if you take it as a daily time frame, it is one day. The next day it had completely gap down, and it had never touched the low of the previous candles. But here the middle candle doesn't have any connection with the remaining two candles. It is completely gapped on. It is separate candle. So it's like a these two are parents and this is a abandoned baby. So we call it as a bullish abandoned baby. And when we check here, okay, it has connection. Okay, these candles are touching the lows of the previous candles or next candles. So we call it as morning star. And if it forms completely irrespective of the previous and next candles, the middle candle, then we call it as abundant baby. The same with the evening star. And the evening star, if the spinning top forms, we call it as simply evening star. And instead of evening star, if doji candle forms, we call it as a doji star and abundant baby. If the middle candle doesn't have any connection with the other two candles, we call it as a abundant baby. Again, here, if we start understanding by the names, it will be very difficult and it will be very confusing. So just if we understand the psychology that when the price is falling, and then here again, here what happened when the price is falling? Red candle forming a red candle is not a big deal, but at the time if that green candle forms, and that too in a question mark, like in a big size, I mean based on big size candle or doji candle forms, and then we get a further confirmation. Then it indicates a reversal, and then it indicates a bullishness. And again, in evening stock, when the price is increasing, forming a green candle is not a big deal. But at the time, if the red candle forms, and again it gives us confirmation, and it indicates a bearishness. And at last, this is the last. We have three white soldiers and three uh, black crows. We call it as white because previous days green candle is on white color. In previous days red candle is on black color. So we call it as three white soldiers and three black crows. So here in three white soldiers, it is a bullish reversal candlestick pattern consisting of three consecutive green candles. Each of these candles opens within or near the previous candle's body and closes higher, making higher highs and higher lows. In this pattern, each candle in the sequence opens slightly above the previous one and closes higher, showing that the bulls are gaining control and pushing the price upward. This consistent upward momentum over three sessions reflects increasing confidence among buyers. And typically, in the three black crows, it is a bearish reversal pattern consisting of three consecutive red candles. Each of these candles opens near or slightly above the previous candle's body and closes lower, forming lower lows and lower highs. In this pattern, each candle opens significantly slightly below the previous one and closes higher, showing that the bears are taking control and driving the price downward. This consistent downward momentum over three sessions indicates growing selling pressure. Again, if we check the three white soldiers in shorter frame, and if we check this in higher frame, we get a bullish Morobosu candle. And if we are looking at the three black crows in a shorter time frame, and we look at the higher time frame, we will get the bearish Morobosu candle. Again, at the end of the day, we need to understand the psychology. So again, the psychology is the same. The same thing, the 2 points which I had discussed at the starting of this meeting, that if a candlestick is forming, then the price is falling, it indicates a bullishness. And if the candlestick is forming, when the price is increasing, it indicates a bearishness. I mean, I mean, if we understand these 2 points, we are, I mean, I can tell like we can understand the half 50% of the candlesticks. So again, we need to understand the psychology, and we need to, I mean, these three, I mean, the combination of three candlesticks, it will appears very low. I mean, I mean, we can see, we don't see it more often, we can see it very rare. So just by looking, I mean, just by looking at these candles, and I mean, just by practicing more and more, just by analyzing it more, we can understand more. So, sir, I mean, is there any doubts? Is there any doubts?